Evening, everybody. It's 6:15, and this is your closing comment on this really solid day. It's video 1536, and I'm going to make it pretty short. Um, I'm not going to tell you what all the stocks did. They were all up. Doesn't really matter. I will say that the CPI number at 7.7 was okay. Um, but I will tell you that in order to get back to what prices were not very long ago, if something that you buy was up 50%, it has to go down one third in cost in order for it to be break even. So while we may, in fact, have seen peak inflation, it's not going down anytime soon with any magnitude. This was clearly a short covering rally. We are still in a bear market, I believe, but the numbers were impressive. 1200 on the Dow for 3.7, 760 on the Nasdaq, 7.35, the biggest winner, um, and the Dow Jones Transports up 750. That was 5.56. Followed closely by 207 in the S&P, 5.54. Um, and the little small cap Russell up 107 and a half, 6.11, a really impressive showing. Advanced declines on the NYSE were 7.5 to 1. And over on the NASDAQ, it was just 4 to 1, pretty decent. The volume really picked up, though. Volume was 6.3, which is well above anything we've seen recently, with the one exception of a rebalancing on on a month end not very long ago. Um, Oil up, gold up 40, silver up 40 cents, which is kind of an underperform. Bitcoin, after excuse me, hitting 15.1, closed 17,780, up 2165, still has a very long way to go. And the chart on the screen is the dollar. And the dollar is back to the same area of the breakout, back to the upside here, back in August. We do have a series of lower highs. I put these on this chart, a week ago. And we did break solidly through this 100-day moving average. Um, and the reason for this was the move in the bonds. Um, I don't remember how long it's been since I saw this kind of a move in the bonds on a daily basis. I mean, it's still making, in the grand scheme of things, it's still making lower highs. It's got a long way to go to break to this one. Could we rally to 130, maybe even 135? I don't know. Um, Depends upon what the numbers look like next week and next month, and etc. But that was a really substantial move off the low on a daily basis. So, pretty impressive. Anyway, my concern is several folds, but really the main one is that as the Fed continues, even if it continues on a slower pace, um, I guess the futures for Fed funds rate are now showing an 80% chance of only a half a point raise next month. Next month's a long way away. And, that's great. And we could have a rally. But I have to say, earnings are still declining. And unless we really move substantially on interest rates and inflation, they're going to stay poor. Um, and so, I'm a little bit concerned there. All right, folks. Oh, one other thing. Um, the 210, the yield curve, the 10-year was down 30 basis points or 31 basis points today at the close. Unfortunately, so was the 2. So, really, the yield curve has not changed. It's still negative. It still continues to point to a recession. I personally think we're already there. And if you go by the original definition of 2 quarters of lower GDP, we're there. So, I hope you enjoyed the day. Today was one of those days where everybody who says you need to be in the market, if you miss any of the top 4 or 5 days in a year, your performance gets dramatically cut. That's what today was. Today was one of those days with huge gaps to the upside for just about anything that you look at. All right, folks, I'll be back in the morning. And tomorrow, by the way, there's no bond market for Veterans Day and no banks, but the market is open. So I'd expect it to be a little on the thin side. Have a good evening.